with, as we all know, the network has been glitchy of recent, so I'd rather use my bandwidth for the presentation rather than split the bandwidth available between my video and presentation, if that's okay. All right. So have I been given permission to share my screen? Okay, could you Olaraju, could you please grant me permission to share screen?
Yes, you're ready. You're already a host. You're already the host.
All right, thank you. Okay, I have multiple screens on. Could you just confirm which one is being shared? Is my presentation screen shared? Okay, great. All right. So, just like Olanwaju said, late last month, we woke up to, a revise of the minimum wage law. Interestingly, right? I went through the previous act and the amendments to the act, and there wasn't really much there. It was just 1 or 2 page, more like, and then that got my just a short amendment. Interestingly, right? The previous act, the 2000 Act, created there's a provision in the act that the minimum wage expires every 5 years. Okay, so the new amendment, so that means if it's 2019 to 2024, 5 years. Mr. President did not know everything that happened with the provisions of the act. Okay, there was nothing novel, all right, because the act by implication expired 5 years. So what he just did was to renew the minimum wage in line with the provisions of the act. All right. So interesting, they have now revised the expiration period from 5 years and revised it down to 3 years, which I think makes sense because you can't wait for 5 years before salaries are reviewed. I mean, if an organization waits for 5 years to review pay, I don't think there will be any employee left in that organization. So those were the 2 major changes. But before we talk about the 2 major changes, right, I must state this. And for those who know me, this is a table that I am not shy to shake, okay? There is a fundamental problem with the minimum wage law, okay? And I would start with the nomenclature of the act itself. The act is minimum wage, okay? And then if you go to the dictionary, by way of definition, okay, a wage is defined as a fixed regular payment earned for work or services, typically paid on a daily or weekly basis. All right. However, if you read the act, it talks about a monthly payment. So clearly, if we look at the definition of a salary is defined as a fixed regular payment, typically paid on a monthly basis, often expressed on an annual sum, made by an employer to an employee. So, that just begs the question, why do we call the law minimum wage when really it's just a minimum salary? That's a review that I think is long overdue. All right. So again, I repeat, the 2 major changes are minimum wage was previously 30K, reviewed to 70K per month, whilst and that is gross, by the way. Okay, since we are all HR professionals, we can break it down. So the 30,000 naira is not net. Okay, so whatever is capped as minimum wage will still be subject to all statutory deductions. All right. Also, let's maybe take a deeper look, because I went through about 37 questions from everyone who registered for this. And these questions made it necessary for us to set this groundwork before we dive into the presentation itself. Okay, so furthermore, to understand the minimum wage law, there are certain exemptions, okay? One, part-time workers are exempted from the Minimum Wage Act. So if you work for a duration shorter than those, comparable to full-time workers in a sector or occupation, you are a part-time worker. All right. So if the standard work in Nigeria, we operate a standard 40-hour work week. Okay. If you work for less than the standard 40-hour work week, you may be classified as a part-time worker, and then the minimum wage would not be applicable to you. If you work on a commission base, maybe those into sales, for example, if you're a salesperson and you are you earn a full commission as against a base pay, you can also be classified as exempt under the Act. If you work for an establishment or individual employing less than 25 full-time employees, all right, this one I put in bold because it's very key we understand this. If you work any organization that employs seasonal employees, especially those in agriculture, okay, you're not within the ambit of the Minimum Wage Act. And also any person employed on a vessel or aircraft to which the laws regulating merchant shipping or civil aviation apply. So what's the implication of this, okay? This simply means that if I'm to break it down, if you're a personal nanny, driver, cook, cleaner, you are exempt from the provisions of the Act unless the individual you are working with has more than or a minimum of 25 of such nannies, drivers, cooks, or cleaners in the employment. However, the Act does not state you cannot pay the minimum wage, but that's if you can afford it. So in such circumstances, maybe the minimum wage will just be a minimum standard, but not a law that can be enforced. All right. And talking of enforcement, there are penalties for failure to comply. And one of the penalties is a fine not exceeding 5% of the offender's monthly wage. So we know what we pay as, what's it called? ITF, which is 1% of your monthly wage. Imagine paying 5% of your, total monthly wage as a fine simply because you failed to comply with the provisions of the Minimum Wage Act. Failure to comply also attracts, payments of outstanding arrears. So the Act came into force July. If an action is brought sometime in December, all accrued, wage differential will be payable. Okay. And then there's an additional penalty of not less than the prevailing CBN lending rates on the wages. So it will treat the differential as a loan. Okay. And that would attract an interest. So last I checked, the current MPR for loan is somewhere about 25%. So imagine paying, and then that's per annum. Let's imagine it's 30%, right? So that means you'll be paying 2.5%, per month on, the unremitted portion of the wage. That's the differential, okay? It's also instructive to note that the national minimum wage may be enforced by an aggrieved worker trade union, or the Minister of Labor and Employment. The National Industrial Court is the court of first instance. That's the court that has competent jurisdiction in respect of enforcement of the minimum wage. So the last thing you need is an aggrieved employee, taking the organization and even the HR department to court for violation of the minimum wage law. All right. So with this understanding, okay, I repeat, one thing that is very instructive to note is that if you have less than 25 full-time employments, okay, full-time employees in your employ, the Minimum Wage Act does not apply to you. So that precludes a lot of micro MSMEs, from, the being under the umbrella of the Minimum Wage Act. Okay, I really love Shedrack's comments. He says, why do we call it minimum wage when it is indeed minimum salary? Okay, yeah, I agree with you, Shedrack. This concept is long. So I would state that, in all fairness, right, our laws are a relic of the colonial era, okay, where we had colonial masters, and the colonial masters paid wages to the Nigerian workers, okay? In fact, if you look at the definition of a worker under the labor law, we're not talking about the labor law, but I'll just state this. Even under the Minimum Wage Act, I must state that a worker, interesting definition, please pay attention, means any person who has entered into works under a contract with an employer, whether it is quote and unquote, please hear this out, manual labor, clerical work, whether it is oral or written, implied or express, whether it is a contract of service personally to execute any work or labor. Again, I repeat, our laws are a relic of the colonial era. Why? So that means that white-collared employees are not under the definition, or are not included under the definition of a worker under the labor law and under the minimum wage law. So there's a lot of house cleaning that needs to happen in, in our legal and regulatory ecosystem. All right, but I don't want us to go down that direction because that's a rabbit hole, that would take us off on a different tangent. Okay. Sorry, Olanrewaju, if I return the hosting rights to you, would I still be allowed to host because I'm presenting?
Okay, please, can you remove waiting room? Just remove waiting room.
Okay, hold on a minute. One second, please. All right, I've disabled the meeting room, so let me proceed.
Thank you.
Okay, so again, like I said, right? The real problem is the fact that our labor law, legal labor law generally, and when I say labor law, I don't mean the Labor Act. I mean all the laws relating to employer and employee relationship. they are in need of, a major overhaul to reflect the times and seasons that we are in. And, that colonial mentality behind these inherited laws really needs to be expunged, okay? Really starting from the very definition of a worker. We should even change it from a worker to an employee, okay? Because worker just keeps it within the ambit of those who are doing purely manual or clerical work. And really, during the colonial era, all Nigerians could do was manual and clerical work. Again, like I said, that's a topic for another conversation, all right? So there are two ways to implement this minimum wage, okay? And we're going to look at the easy way and the holistic way, okay? So the easy way really, especially if your head count is not so much, okay? You can do the easy way, right? So you just start off by identifying who are the affected employees. You may have just maybe 2, 3 of them in your payroll, okay? So you identify Musa, Shade, and Chioma, okay? And you notice, okay, Shade is currently earning 35,000 naira, okay? And we are moving her to 70,000 naira. Musa is currently earning 40,000 naira. We are moving him to 70,000 naira. And Chioma is currently earning 50,000 naira. We are moving her to 70,000 naira. That's a bit, easy, okay? So you calculate the wage increase. What's the wage increase? So you look at the wage differential and the budget impact. Wage differential means you determine the difference between their current wage, the new minimum wage, and the differential for the affected employees. So if, what are the 3 names we called again? Chioma, Shade, and Musa. Okay, we said Musa is earning 35,000, and then minimum wage is, so his current wage is 35,000. New minimum wage is 70,000. What's the differential, wage differential? 35,000, right? So somebody should write 35,000, minimum wage is 70, right? French. The minimum wage is 70,000. So that's differential is 20,000. So 20,000 plus 65,000 is what? Right? 85,000. Okay. So the budget impact is 85,000. Are we all together? I hope I'm not speaking to myself. Okay, great. Yes, 85,000.
Yes.
Great. So that's very easy. Okay. You calculate the total financial impact of the wage increase on your payroll budget. 85,000 naira. You do a memo to your CEO, MD, kindly approve the wage differential of 85,000 naira to ensure compliance with the new national minimum wage. End of story. That's easy to compute, but I wish the world were easy. Okay, many of us will not have it so easy. Okay, and that's also not a holistic way of dealing with it. All right. So once you've done your memo, you update the Chioma, Musa, and Shade on your payroll, all right? Update it, and you communicate to Shade, Musa, Chioma, due to the new minimum wage, can you note that your salary has been revised upward from 35, 40, and 50,000 to 70,000 naira monthly, plus subject to statutory deductions. Receive this in good faith. And then it's important for compliance and record keeping. If you've never been visited by labor officers from the Ministry of Labor and Employment, you don't want those guys. They come calling, by the way. So I think, yeah, this year and last year, I entertained them. I had to entertain them, and they come for audits. They will ask for your payroll, and believe me, going forward, they will pay attention to this. So I implore everyone, make sure you keep these records, because when the labor officers who obstructs an officer of labor from carrying out their duty. So, okay, Olanrewaju says he entertained them about 6 weeks ago. They asked for, as at 6 weeks ago, you were lucky because the new minimum wage was not yet in effect. Now that the new minimum wage act is in effect, they will come calling, possibly they will come calling before the year is over. And this is what they will look out for. And I must inform everybody on the call that there is a fine of 250,000 naira payable by the obstructing officer, not the organization, no, the obstructing officer. So if it is your email address that they sent, or it is you that they address the letter to, if there is a non-compliance or there's any form of obstruction, you are the one that will individually be liable to pay that fine for non-compliance. And if you have inaccurate records, it is the HR. I'm saying not the organization. The fine for the organization is different. That's 5% of the labor cost for the month, per month, okay? But for the HR professional in charge of keeping records and compliance, the HR professional will pay a fine of 250,000 naira. Well, I know we have plenty big men and big women on the call. Maybe 250,000 naira is small money they can pay to Uncle Sam, you know. But if you think that's a lot, then you need to pay attention to compliance and record keeping, okay? So that's it for the easy way, all right? Then we're going to talk about the holistic way. And I particularly like the holistic way. The holistic way addresses 90% of all the questions prior to this event that I saw in the form that was filled. And the holistic way just addresses it, you know, end to end, really, okay? And the holistic approach will be to review your pay structure in compliance with the new minimum wage act. And that's what we're going to try and look at practically. However, let me put this caveat, you know, building pay structure is a session on its own. All right, so I'm going to try and blitz and breeze through a lot in order to manage time. If we want to go into the nitty-gritty details of building a pay structure and then building a payroll based on the new pay structure, that would be a very, very lengthy conversation in and of itself. And that's something that should be had as a standalone conversation. But we're going to just do a quick run through on how to build, you know, a pay structure, maybe not necessarily from scratch, but how to build a pay structure that now accommodates the new minimum wage. All right. I want to share another document. Okay, please kindly, I'm sharing an Excel document. Can anyone just confirm to me that they can see my screen?
Yes, it's off. I can see it.
Beautiful. So this here is just a dummy pay structure that I like to use for, you know, purposes such as this, okay? So for those who are not familiar, this is what a pay structure typically should look like. You look at the accountability level, your grade level, the job grade. Again, this is subject to your own industry nomenclature, all right? And then for each grade range, you have jobs that fall within each grade range. This is not a session on job evaluation or and all of that, how to fix the jobs into each of these grade ranges. That's a separate conversation for another time. However, for the purpose of this minimum wage, let's look at the blue section here. Let me freeze my pane. All right. So you can see here, right? I just created this. Let me take this out so that I can explain what we just did. Okay, great. So this is I automated this Excel document, and okay, I'm going to rush through a lot of things because I'm going to leverage on the fact that everybody on the call have at least a fundamental understanding of compensation and benefits. So I'm not going to start going into the intricacies and the nitty-gritty of explaining what a grade range is, what a pay range is, what the midpoint differential and the range spread is in the nitty-gritty details. I will just leverage on the fact that everybody have those basic understanding of, midpoints, grade range progression, range spread, and, grade levels, all right? So I want to assume that the jobs that will fall under the minimum wage will not be professional jobs, okay? So I just listed a family of jobs: drivers, cleaners, T-boy, T-girl, factory workers, shop attendants, security, nanny, cook, waitress, housekeeper. I should even add maybe front desk. If there's any other job that you think would fall within this minimum wage, then, you should add it to this bucket. In some companies, the front desk would probably fall under the minimum wage category. Yes, so so typically what I do is I have a pay band for my non-professional staff, those that typically will fall under this job family, okay? And the grade range for this job family. Pardon me, I'm a bit technical. This is the nomenclature for comp and ben, so we have to speak our lingua. All right. So how do you, when you're building a pay structure, you start from the midpoints, okay? Many people think you start from the minimum. So over here, you have the minimum points of the range, and then you have the maximum points of the range, okay? You can have your range with 3 notches, 5 notches. I've seen grade levels with 4 notches, but ideally, it's advisable to always use an odd number. If you attend a full comp and ben class, you'd understand why it's advisable to have your range, your pay range or your range spread with odd numbers, all right? So I use a 5-notch range spread, and it's always the best place to start is at the bottom middle. Okay, so how do you arrive at what should be in the middle? Okay, you start off by knowing what your minimum pay should be. Okay, now how do you know the minimum wage? This pay structure is on an annualized annual gross, okay? So you start from this point, okay? What is the minimum wage? If I delete this, everything goes, all right? So again, the minimum wage is 70,000 naira. So this is easy, 70,000 naira. So based on the minimum wage, let's look at it. Let's walk backwards. What will be the annual pay? The annual pay will be the minimum wage, that's 70,000 naira times 12, isn't it? So 70,000 times 12. I hope I'm not losing anyone because this is where it gets technical. This is not a Turenshi class, okay? It's a practical one. So we'll just start from here and we'll build it holistically. So 70,000 times 12 is 840. That's the annual pay, okay? Thank you, Iggy and Olarewaju, for letting me know that we're together, okay? We will do some small mathematics here. All right, 70 times 12 is 840, okay? Now, I just made a little provision for leave allowance 13th month, okay? So I made leave allowance 10% of the annual gross. Now, that is subject to you, your own organization. What's your leave allowance policy? If it's, some people do 10% of annual, some people use annual basic, some people use 10% of annual basic, some people just do leave allowance of half of your monthly pay. Whatever your leave allowance is, just put it here, okay? And then your 13th month again, there is no hard and fast rule to it. So in this scenario, I just use 13th month as monthly gross, which is 70,000. Okay. So if you add it all up together, so if you add 840 plus the leave allowance plus the 13th month, that will give us the total annual pay. Okay. Bear in mind that this minimum wage includes your basic housing, transport, wardrobe, bugwe. Everything is inside the 70,000 because that is the monthly gross. Okay, so if you look at the 1,064,000, that is the total annual pay. So I know that my minimum pay range must not be lower than 1,064,000. So I start off with a number. Now, this is where we do a little here and there to get. All right. So what's my midpoint? My midpoint, I said, okay, if I put my midpoint as 1.5 million, okay? If I put my midpoint at 1.5 million, I hope we can see the 1.5. And I'll explain how all the other figures populated here. Okay. Let me take this out. So we build it together. Okay. Let me take this out. So we build it together. So when building a pay structure, okay, I've looked at it that the minimum point here is 1.3 million, but I want it to be 1,064,000. Okay, so I can fiddle with the range spread. That means the range spread will be the difference between the minimum and the maximum. Okay, so if I make it wider, I make it 30%. That increases this. If I make it lower, 15%, it still increases. I know that this figure in the middle is too high. I played with the figures a bit. I arrived at 1.2 million, and that gave me this if I made the range spread 25. Again, I repeat, I am leveraging on the fact that everybody on this call already has a basic understanding of comp and ben, which means you understand what a range spread is, and you understand what a range progression or midpoint differential or midpoint progression is. All right. Now, the decision you need to make is, if this is your middle point, all right, what percentage increase do you want this level and the next level to have? I chose a simple 10%. Okay. So a simple 10% would mean 1.1, right? So if you add, that's this plus 10%, that will give this amount. Okay. Now, if you want the range spread to remain at 25%, we do this. So this box tells you this midpoint differential is 10% and the range spread is 25%. But this is my worksheet. All right. So if you want the next level to be another 10%, okay, or if you want it to be 15% increase, all right, I will just do 1.15, okay, and that's a 15% increase. All right. If you want to maintain the 15% increase, that is it. But if you want to keep it at 10%, this is a 10% increase. Then if you want to keep the range spread, if you notice, all these rows that don't have a range spread have the same figure across. So if you want to keep the range spread at 25%, just drag this, and then it spreads the figure across. Okay, now you want to know, okay, at every point, how do you know what's the minimum, what's the monthly gross will be? Maybe this shouldn't be minimum wage. This should be the monthly gross, right? All right. So if I just say this equals to, let me pick any figure here. So if I pick the highest figure here, based on the formula, it tells me that the monthly gross here is 155,000 naira per month. Okay. If I pick the minimum point, which is this point here, okay, equals to this. So it says the monthly gross is 70,175 naira. So this is the holistic way to address the minimum wage. And then note that you will now build it into your company's pay structure. Because many people kept on asking me, how would it impact the senior staff who are already earning above the minimum wage? Okay. Now, in this case, this pay structure for those non-professional staff does not overlap. Thank you. It does not overlap the minimum salary for a trainee in this scenario is 3.3 million. Okay. Let's see what that comes to per month. Equals to this. That's about 222,000 monthly gross. All right. So what that means is there's no overlap. However, if in the situation where there happens to be an overlap, then you will need to now increase the pay structure, just pay for your professional staff down to your management, down to your senior management level employees. And then you will now recompute the wage bill impacts, okay, of complying with the minimum wage. Now, there are several things that go into building a pay structure, which we cannot talk about now, like affordability, your internal equity, external competitive equity, external equity as well. All those things are, a different conversation that we need to have. Why are some pay ranges less than others? Why are some grade range progressions less than others? That's a separate conversation for another time. But this is it. Okay. Now there's a final part of this conversation. After you have built in this new pay structure and you have done the budget implication of effecting this pay structure, how do you present it to management in a way that makes sense? All right. What are the metrics you use to present this to your board? All right. I have some universal metrics that I have presented to different boards, from PLC to limited liability, and it's a lingua that they can all relate with. All right. And I'm going to share some of those metrics in a hypothetical situation for us to understand. Okay. So at this point, I hope I'm not speaking over anybody's head. I hope we're all together. I hope I'm making sense. Anyone, am I making sense, kind of?
Yes, please. Yes, from my side.
Okay, great. Please, in the chat, let me know we're all in this together. Fatima, okay, Dikweju, Iggy. Okay, Oyekweju, Slemon, Michael Hastrop. All right, it's good to know we're good. We're good. All right, great. Great. All right. So thank you, Shadi, Shedrack. All right. It's good to know that we're all together here. Okay, so these are universal metrics that any and every board can relate with, okay? So this is a hypothetical situation. Let's look at, now to do this, you need to work with finance, okay? I've been reporting to remuneration committees of the board for how many years, and these are the figures that they pay attention to. So this is not just something I pulled out of thin air. Remuneration committees of several PLCs, multiple PLCs, and limited liabilities, these are the numbers that count. Okay, so again, in every situation, you need these figures from finance or FinCon, whichever one works in your organization. So this is a hypothetical situation, all right? So let's say currently, okay, maybe not previous, let's change this to current. Your current revenue is assumption 1 billion, okay? And this is just, these are all hypothetical. There's nothing real about these figures, okay? Your total business cost is 452 million, okay? And out of this 452 million, your labor costs are 250 million, okay? Simple mathematics would tell me that revenue minus costs is profits before tax, right? That's your PBT. So that means your PBT is 547 million thereabout. Now, if your average headcount is about 120 full-time employees, okay, the revenue per full-time employee is about 8 million, right? And the labor cost per full-time employee is 2 million. So that means your profits per full-time employee is about 4 million. That's very simple number of or average employee count for that period. Now, these are the ratios that make sense in HR. So it tells me that in this scenario, currently, your labor cost to business cost is 55%, okay? And labor cost to revenue is 25%. AA, please, you know, you're my senior here on the course, so I would defer, and you're a consultant, so I like to always defer to you. If you look at these metrics, even though it's hypothetical, right, would you say this is a healthy metric for an organization in terms of labor costs to revenue and labor costs to business costs? So if you have 55% of your business cost as your labor cost, and you have 25% of your labor cost makes up 25% of your revenue from your own consultants and, you know, wealth of experience, would you say this is a healthy place to
Hello,
be?
can you hear me?
Yes, I can hear you, please.
Hello.
Yes, I can hear you. Go ahead.
Okay, I don't think it's healthy because 55% going to HR is huge. What are we going to have left for innovation in terms of cost to business and the labor cost to revenue too? I think it's 15% or 10% in some places.
Hello, maybe.
Did you hear me? Can you hear me?
Okay, I hear you.
Yeah.
All right.
Or do I need to repeat myself?
Please, I missed you.
Okay, I said 55% of labor costs to business costs is high because here we have not even included capital investment and all that stuff. We're not even talking about retained earnings. Then if you now look at labor cost to revenue, I think it's supposed to be around 15 or 10. Hello, did you hear me?
Oh, yes, I can hear you. So, okay, in this hypothetical case, so we can see that labor costs are already high. All right. So, in this situation, right? Okay, great question. Iggy Honora is asking, what would be a good metric for labor cost versus business cost? Agreeably, right? labor cost is arguably the largest cost expense in any business, okay? Of course, that leads credence to the saying that human beings are the most important assets in any organization. I would say that your labor cost to revenue is dependent on your organization and your industry, all right? So some industries are more capital intensive and some industries are more labor intensive, okay? So if you are in manufacturing, for example, manufacturing is more capital than labor intensive, depending on how automated your production process is. I don't know if what I'm saying is making sense. And then if you work in a more service-oriented industry, if you're service-oriented, of course, you leverage more on you have a higher labor cost to business cost percentage. Okay. I don't know if that kind of addresses Iggy's question. Okay. Subjective to the industry. Okay. So you want to know industry average. Wow. AA, could you help out? I have some figures from McKinsey, but that's not applicable to Nigeria per se, but I can share that. I can share that. But I always like to hear from AA. AA, are you there? Do you want to share from your own experience what healthy metrics would be?
No, can you hear me?
Yes, please. I can hear you.
Okay, like I already said, I mean, when I was working in a hospital, I remember then that we always try to keep labor cost to revenue to about 15%.
Okay. All right. Labor cost to revenue. That's fine. So according
like
to
you said, it depends on how
your
the
industry
organization and the HR practices.
Yeah. So according to McKinsey, labor cost to business cost is about the healthy range is between 60 to 70%, according to McKinsey. I am happy to share that report with AA, and she could also share with all the participants because I've had to justify my metrics to a board before. And when I told them that we're doing healthily, we're within healthy metrics, they wanted data to back up my position that they were doing healthy, especially then when I was trying to push for a cost of living adjustment to our entire pay structure. So I had to do that. And I recall then that about 60% was the healthy marker for your labor cost to business cost. Of course, you know, your business cost includes your capital expenses, your operational, that's your CAPEX and OPEX, your operational expenses and your capital expenses. And, you know, labor costs form part of your CAPEX, sorry, your OPEX, your operational expenses. Iggy, are we good? Okay. Okay, great, Iggy. Thank you very much. I would be happy to share the McKinsey reports. I'm happy to share that so that you can also argue your case before your board. All right. So now let's just using this hypothetical case, okay? If the revenue remains at 1 billion, okay? Total business cost. So let's say the wage impact of adjusting the minimum wage, okay, in compliance with the minimum wage results in an extra 30 million, all right? So the extra 30 million means that your labor cost will now be this plus 30 million, right? 30, 1, 2, 3, 1, 2, 3. Good. So that's 280 million. Okay. So that means your total business cost increases by that same 30 million, right? So that means this will be equals to this plus the extra 30 million. 1, 2, 3, 1, 2, 3. Good. Now, Everything else remaining the same. So PBT has reduced from 547 to 517. Okay. Now, automatically, your labor cost to business cost has increased from 55% to 58%. It has all your cost to revenue has increased from 25% to 28%. Again, now you are going to have to argue your case as to whether this is a cost that your organization is willing to take on. Now I'm going to shake the table. In fact, I'm going to break the table with this question. All right. If your management says they cannot accommodate this cost and HR should do something about it without being non-compliant with the labor law, what will you be forced to do as HR? I'm shaking the table here with this question. Please, AA, don't talk. I don't want to hear from AA on this. Okay, Iggy says downsize. This is the elephant in the room. How do you propose to downsize, Iggy? Right size, downsize, right size, whatever. Yasha, letting go of some people in the labor. Okay, beautiful. I also like Iggy throws another angle to this. It says, look for how to increase the revenue. Okay. Awesome suggestion. So you either have to, Priya says, show them the cost of non-compliance. It's not just enough to show them yes, I agree. The cost of non-compliance is 5% of the wage bill on a monthly basis. Agreed. But are you aware? Priya, let me say this to you. I am aware of a situation where if the company is slammed with a fine for non-compliance, are you aware that the board can pass that cost to HR for negligence? Are you aware? Because it is the negligence of HR that made the company get slammed with that fine. So please, non-compliance is not an issue. It's a moot point. We must comply. And if the company doesn't want to comply, they should put it in writing so that when the time to crucify comes, HR's head is not on the chopping block. All right. So, yes, some people say downsize, right size, increase revenue, show them the cost of non-compliance. Compliance is a moot point. Okay, somebody says, look at look at your talent model. Do you need full-time employees? Remember, the minimum wage applies to full-time employees. Can't you explore contracts, part-time, commission? Remember the slides, okay? Contract, part-time, commission, piece rates, right sizing, okay? You want to reduce the number of employees from 120 to 24 because of Minimum Wage Act. Outsourcing, beautiful. Awesome. Okay, now we are thinking. So there are many ways to slice and dice it. For those who have attended any of my classes, I say, look, as HR professionals, we have to be creative. We have to be innovative. We have to just don't think outside the box. Throw the box away and just think, okay? We need to think up solutions to the problem. Your business says, look, we are not going to... Sorry, somebody needs to mute. Okay. All right. Your business says that we don't want our labor costs to be more than 50% of our total costs. Okay? So if you reduce this from 120 to 100, okay, through downsizing, right sizing, outsourcing, contract staff, part-time, full and non-full-time, let's see what will happen if we bring this down to 100. Something is not right here. Okay, revenue per full-time employee increases, labor cost per full-time employee increases, profit per full-time employee increases. Why does, okay, so your labor cost still, no. Okay, naturally the labor cost would decrease, okay? Because it will decrease. It will decrease. So maybe reducing it by 20 staff may bring this down to let's say it brings it down by let me say 40 million. So if I deduct 40 million here and deduct another 40 million here. Oh, no. Sorry, I'm making a mistake. Okay, so let me say minus 40 million here. Somebody needs to mute themselves. Yemi, please mute yourself.
Yemi Shodeko, kindly mute, please.
Okay, I've muted him. Uh-oh. All right. Okay, so if I deduct 40 million from this, it goes to 240 million. Okay. 240. 1, 2, 3, 1, 2, 3. Okay. I deduct 40 million here, it becomes 442 million, right? All right, so if we downsize, we've only brought it down to 54% and 24%. So you see that we need to really try and be creative with how we go about. But this is the metric you use to present this information to your management. All right, I think that brings us to the end. If we have questions, we can address those questions. Olanrewaju, over to you. Thank you.
All right, thank you very much for that. Should I call it exposition or what it is? Okay, so at this point in time, I'm so sure that we have some questions. Maybe there are angles you are looking at this particular thing, or there are areas you feel you should throw more light into. We have the floor, so you can put in your questions in the chat, or if you would like to speak, you can raise your hand so that you'll be given a chance to speak. Okay, so I'm also checking in the, okay, I know you answered this because of your presentation. When Shedrack asks, why do we call it minimum wage when it is minimum salary? So I think you talked to that, or I don't know that you want to also throw more light into that. Okay, what else?
Ayola has his hand raised. Uptown Girl Lizzie also has her hand raised. Do we want to give them the opportunity to ask their questions?
Okay, so Ayola, you can go first, so we can.
All right, good evening, sir. Thank you very much for the session. All right, so my question will be, what if we adjust inflationary? I'm just trying to look at how to manage that cost itself. So what will we do an inflationary adjustment instead of this method and staggering the percentage increment as well on the pay structure, not having a fixed figure instead? Is there a way it can reduce that cost, or what would it be the implication on the entire cost to the company? Thank you.
Okay. The last time I checked, as at June, okay. I don't know July. I don't know the figures for June. But are you aware that the figures for June, I don't know of July, inflation rates was 39% on core inflation, that's cost CPI, right? Consumer
Yes.
price index. Are you going to increase your wage bill by 39%? Are you going to
No,
increase it? That's
average.
extremely
We can
high.
average maybe year to date or from January to July,
Year
for
to date,
example.
that is the 39% as at
Okay.
June. That's a lot. That's a
And so
whole
what will
lot.
be
I don't think,
from January to July, for example?
if you use, I don't know the figure for July, but I'm telling you that as at June, inflation was 38, 39%, which is the highest it has ever been. I'm telling you, on 2 years, 4 years ago, average inflation rate was between 17, 18%. But now our inflation rate is almost 40%. I don't know how, as your company's revenue increased by 40%, because these are the questions management will ask. If revenue has not increased by 40%, and you tell them you want to increase labor costs by 40%, Ayola, they will walk you out of the room. Oh. I kid you not.
I understand, sir.
Ayola, please don't go there. Oh. Inflation rate is too high a benchmark to use.
And yes, in addition to that, I also believe that it is the past angle it was coming from. It's easier when you are looking at maybe the downtrodden, maybe at that level. So the higher you go in the organizational structure, you know it's going to be burdensome to the organization. So, like you rightly said, I think it's a no-go area. So, thank you. So, Uptown Girl Lizzie. So you have the floor, please.
Good evening, Mr. Patrick.
Okay,
Good evening.
Good
Yeah, thank
evening.
you. Thank you very much. All right, so my question is just based on from the beginning, you said the people that receive commission, that's the sales, is it the sales department now or the sales people that receive commission? All right, so I just want to tweak it a little bit. If you have the sales department that receives salary, because, okay, let me say in my organization, we have sales departments, they have base pay and they also have their variable pay, right? That is the variable pay. It's whenever they sell, whenever they make profit or they sell products, the money for maybe for a quarter, the money is then paid to them, and also 4% of whatever it is that they sell is also paid to them. So I just want to confirm from what you said, are you saying that they are not going to be affected by the minimum wage or their commission, just to get clarity on that? I don't know if you understand what I'm saying.
I get you. And, Lizzie, I'm happy with that question because for me, it shows you really paid attention. So yes, that was a curveball and I was expecting that question from anyone that really paid attention. The deciding factor will be whether they are full-time employees or not. Okay. Remember, the first exemption is part-time. Part-time employees are not covered by the Minimum Wage Act. So you have some full-time employees, like you said, that earn variable pay. I love what Olarinwaju said, variable pay, which includes bonus, incentives, commissions, etc., as part of their remuneration. Okay. Now, in such case, bear in mind, you also said something. They receive a base pay. Okay, then along with the base pay, they receive a commission. Under the Minimum Wage Act, the employees that are exempt are those who work as full-time, they call them agents. There's a difference between a sales executive and a sales agent. Lizzie?
Yes.
So the act was referring to the sales agents, because the sales agents, they are only agents. They are not officers of your company. And agents cannot bind the employee the employer, or the principal. You know, for agents, you have principal and agent relationship. For a full-time employee, you have employer-employee relationship.
Yeah.
Is a different one. Yeah. So the act is only referring to, in fact, if I'm to use the nomenclature of the Labor Act, sadly, and that needs to change. Are you aware that the Labor Act refers to master-servant relationship, not even employer-employee relationship? But again, I keep saying, another talk for another time. So according to the Labor Act, the Labor Act refers to master-servant relationship. Okay. The people who are exempt are those who are in a principal agent relationship. Those people, they don't earn any base pay. You don't do HMO for them. You don't do those normal things you do for a full-time employee. All they earn is their commission on sales. Chikena.
Okay, fantastic. Thank you.
Lizzie, does that answer it?
Yes,
All right,
thank
great.
you.
Great, thank you. Any other question? All right,
Oh,
BO.
sorry, I never knew I was muted. PA
Okay.
was, okay, before I allow BO, PA asked that, are we to adjust the difference in the new minimum wage across board for both
Yeah.
non-professional?
Larry, please check the WhatsApp. There's a question there.
Okay, yes, I'll pick that after this.
Okay.
Say, are we to adjust the difference in the new minimum wage across board for both? I guess she wants to write professional and non-professional.
Yes, so very, very, I like this Priya's question as well. It's another question that shows me somebody really paid attention. Note that I said, the answer is yes with a condition. If after you've adjusted for the non-professional staff, there is now a major overlap, okay? Yes, pay structure should have overlap, and again, overlapping means I'm leveraging on the fact that we understand basic comp and ben, okay? If there is no major overlap, you don't need to, okay? But if you've adjusted for the non-professional staff and then their salary now overlaps uncomfortably into the salary of professional staff, then yes, you will now need to adjust it for the professional staff, to maintain comfortable margins of overlap. Pray, I don't know if that addresses your question sufficiently. Okay.
I think that's right.
William?
So,
yes.
Yes, please. Thank you. So, BO, you have the floor now. You can unmute.
Yes, thank you. Good evening. I hope everyone can hear me. I'm driving and I'm trying my best to listen. Okay, great. Okay, so I'm not sure if this was addressed at any point in time. So what happens to maybe if I have coppers, right, or I have cleaners? I know you said some of these things. I just want you to help me again because I have coppers. Would I have to adjust their pay to 70K gross? It's just a yes or no, and then I'll just drop off.
Okay. I don't want to just say yes. Okay. So I will say yes within the conditions provided by the Act. So typically, youth corpers are called interns, okay? Interns are qualified as full-time employees, okay? Now, again, yes, under the qualification that you have more than 25, a total of 25 employees in total. If your organization has less than 25 employees, inclusive of the NYSC interns, then you do not need to enforce compliance with the Minimum Wage Act. But if your total head count is 25 or more employees, inclusive of the interns, then the minimum wage of 70,000 Naira becomes applicable. I hope I answered your question sufficiently, Bill.
Kind of, at some point I lost you. All I heard was they do not need and then you dropped off for some seconds.
Okay, I'll answer again. NYSC interns under the purpose of the Act are full-time employees. I repeat, NYSC interns for the purpose of the Act are full-time employees. If your organization already has 25 or more employees, inclusive of the interns, then you would have to pay the minimum. You have to comply with the 70,000 naira minimum wage for the corpus, for the youth NYSC interns, all right? However, if you do not have up to 25 employees, inclusive of the NYSC interns, you don't need to pay the 70,000 naira. But of course, you know, I'm sure your organization can afford it. So on an ex gratia basis, I'm sure you can just, you know, dash the corpus the 70,000, you know, because you're a nice person.
I was just checking. I was just checking.
All right, thank you very much. Before I allow the next question, just on a lighter note, when you were talking about the core members, I would like to also, can the company pay the differences? Government will be paying a portion because they earn from government. So, but like I said, it's just on a lighter note. So let's leave it at the side. Okay, I think the question are just coming now. Okay, before that, Honora, please, you have your hand. You can go ahead. I have a question here that I also want to read, but you can go ahead, please.
Thank you so much, sir. And thank you very much, Patrick, for this session. It's been amazing. I'm going to drag you back a bit. I don't know if I can be heard.
Oh, on Iggy, we hear you clearly.
Okay, fantastic. I will just drag you back a bit. Please indulge me. I had to take a call that forced me to get off the call briefly. I ended your explanation with the last spreadsheet where it was seen that even though we had reduced headcount, there was no real discernible impact on the cost of labor, I think, and the cost of labor to the business. Was I right, or was there something that happened after that point? Because that's where I stopped. Because I really wanted to hear how you rounded up in terms of presenting this to the board and executive management.
The difference is there. The difference it came. I was just adjusting the formulas on the sheets that didn't pick
fantastic.
it. So it actually brought it down. You know, it brought it down from so hold on. It brought it down where we landed. It was from 55% labor cost to business cost to 54%. And labor cost to revenue came down from 25% to 24% when we reduced the headcount and when we reduced when we also reduced the labor cost and business costs.
Okay, because that was confusing to me and that was where I dropped off. I'm glad that and with that adjustment. But then how would you then so I'm sorry, I'm going to take up somebody's time. So having done that and okay, there's a slight differential, of course, slight knowing, depending on how many millions or billions we're talking about. So how then would you make a winning case? Because you and I and most of us on this call know that this is going to be a hard slog for most of us to persuade our people. Some of us already did something in January or did something in December against January at the end of, performance appraisals and organizational evaluation and so on. How then would one begin to pitch this?
So, can I call you Iggy? Is that fine? Or you prefer?
Yes, that's fine. That's my middle name, actually.
Okay, great. So I don't want to go into performance management. That's AA's forte, but I will state this, okay? I have to say it because this would require a holistic approach, beyond just the conversation, beyond just the limits of this conversation. And I'm going to also invite AA as well to talk about this because she's a core performance management specialist. But I'll say this, right? We're going to have to give and take, okay? If we're going to ask the business to give an increase in costs, okay, in terms of reviewing our wage bill, all right, there must be some give in terms of performance deliverables, okay?
Sure.
I know of a business that immediately said, look, everybody, I know several businesses, okay, that said everybody is now a salesperson. Everybody have financial targets. I know a real estate firm that said, you know what, all employees, you have a target of a house to sell, okay?
Sure.
Every organization, every employee had business development target, because in order to afford the increased wage bill, there needed to be some commensurate increase in the revenue.
Definitely.
And then that became part of every employee's performance KPI. Okay. I don't think we would win the argument if we go to the board just asking them to give without any take. What are they getting in return? So AA, I don't know, you're the performance management specialist here. What else would you advise?
Okay, in terms of performance management, yes, targets have been set, and I really see that more as more like it's a way of generating revenue because we're increasing salaries. However, there's another angle that we can look at, which is reducing waste. I would pick that first. Reduce. Okay, if I say cost, when people say reduce cost, people can start cutting on quality. They can start cutting back on a lot of things. So let the language be, let us reduce waste, which requires even the process owners themselves saying, where can we reduce waste? And waste it's just not about money. It's also about processing time. It's about auditing our processes. Are there redundant processes? Are there processes that we can just cut off? You know, all those things. No, are you supplying diesel and nobody's looking at diesel? You know, all those little things. Should we just switch off generator at 5 p.m.? Everybody go home. Yeah, everybody go home. Whether you have finished working or not, but between 8 and 5, you must deliver. After 5, if you want to sleep, there's no generator. That means you will open the window, and you know all those things. And it's very, very important, because for everybody's mind, the next is that, oh yeah, people can bring in money, but they can be bringing in money and costing you more to run the business. And also because at this level, we already had a performance contract from the beginning of the year, resetting the goal now. So I would even always say, invite the staff. Oh yeah, come. This is it. Show them all those statistics. This is it. How are we going to pay? So you tell us, what can we do? How can we enhance how we serve? It's easy if you are selling house and you are selling this. What about hospitals that you are not selling anything? But you are, you know, those hospitals, some of them run 24-hour generator. Whether they are there or not, they are doing AC. And whether they have 5 clients or 20 clients, you are paying salaries. So it's time to say, okay, you know, it's either we reduce waste, or we have to find, some people have to find their level, and the people that remain, we will increase their salary. There's nothing we can do about it. But you find out that if you say that nobody wants to say, you go, or is it me that I'm going to go? Everybody now says, okay, there's something that we can do. So this is such a time that when we talk about involving even the employees themselves in this process, it is beyond CFO, because CFO will just sit down there and say, cancel water. They don't drink.
They don't drink 5 bottles. Let's take
no seaware. Okay, it's not pure water. Then after you cancel pure water, you say, you know, all those things that at the end of the day demotivate staff, that they say, if you are going to take your job, take your job. Anyway, we are here, sharp, and we are marking time. By the time I collect 3 months salary, I'll find my level. At least I've collected 3 months. Or they are spending time doing their own business while there.
You
know, so that's what I would say to that.
Thank you so much, fam. Thank you so much.
Very much. We need to move very fast. Very, very fast now. Okay. Thank you. So we need to move very, very fast now. So there's a question here I think is maybe partly answered or not. So this person is saying that, okay, in a logistic firm where they have riders, and these riders have basic salary and commissions. But he or she went further to say that 85% of staff strength, their net pay is already above 70K. So what can be done? That's from Olainka.
Praise God. That's what I think you should do, that you are already in compliance with the minimum wage. So if you want to do anything else, on top of it, I mean, questions around affordability, internal equity, competitiveness, you can address all those questions and make a case for any further pay review, but it will not be based, our conversation is the minimum wage. You are not going to need to review pay in order to be compliant with the minimum wage. If you want to review pay, think of another reason: cost of living adjustment, inflation, protests, whatever. All right. But not based on minimum wage. You're already in compliance. If everybody is earning above 70K, that's fine.
All right. Thank you very much. So this question now is a follow-up to what you said earlier regarding NYSC. Now that this company has 25 and above staff, and so inclusive of NYSC, now that the NYSC guys are being paid, they must be paid 70K. So because they are earning minimum wage now, that 70K will be taxed. Remember that all income is taxable.
Yes, of course. The minimum wage is subject to all statutory deductions. So that 70K is monthly gross. It's not monthly net. I repeat, 70,000 naira minimum wage is monthly gross. It is going to be subject to all statutory deductions.
All right. Thank you very much. Thank you. Now, so this question is from me, and I'm asking this so that we can also glean and learn from it. Now, during the course of maybe about 2 days ago, I heard the governor saying that he's going to have a problem paying the minimum wage, and he said he's also aware that some of his colleagues will not be able to pay. Now, because government has come forward to say, okay, if you don't comply, so will happen. Now, if this kind of we are hearing this kind of thing from supposed people that are in government, how easy is it for us as teacher professionals to drive these things? Because if some people are already saying they cannot pay. Meanwhile, remember that when it was 30K, we have people that are still paying the 18K. So what's your take on this? Thank you.
So affordability remains a very big factor in any compensation and benefits conversation, all right? But then you need to show affordability with, don't just tell me you cannot pay, okay? What is the revenue? So those are the metrics we looked at, okay? What is your revenue? What is your current labor cost, okay? What percentage of your labor costs makes up your revenue, okay? What percentage of your total cost is comprised of your labor cost? Those are the questions that will really show whether there is a clear argument. Some people just shout, oh, I can't afford it.
Hello, is it just me? Can anyone hear him? Can you hear me? Please confirm. Anybody?
I can hear you, but I can't hear him. Can you hear me?
Okay, I can hear you. Okay. So I guess
well, the network helped us up onto this point because we've heard him all through.
Yes, I guess it'll be back.
Okay. So maybe while we're waiting for him, we just have some few announcements. So Patrick is open to, okay, he's back.
He's back now.
Patrick? Yeah. Patrick, please go ahead. We need to wrap.
Let me just check with him. Oh, you are muted, please. In case you are speaking, Patrick, you are muted. You need to unmute. And Oyekweju, you were asking about what's the implementation timeline. Well, I think the moment is passed into law, implementation has started. So anybody can we can implement almost immediately if you can afford it. But the moment the law has passed, Iggy say, I think it's out again.
Okay, so let me quickly make this announcement. So we realize that a lot of us may be wondering, okay, how do I get more support? The truth about it is that Patrick has been doing a lot of pro bono over the years. I think about this year, he has done about 2 sessions with CIPM Lagos State. And he has graciously announced that anybody who wants to take on personal coaching with him should send us a mail, and then we will connect you to him. And then he will let you know about the arrangement, but it's paid. It's going to be a paid coaching time, because even this, he actually agreed to this because we had worked together with CIPM during the year. We had 2 sessions of compensation and benefit, and he graciously agreed to share. And you can see from what he did that he's not just about, he came here and he demonstrated to us what we could do, gave us indices, gave us what we could. So if you are in need of further support, you would need to write to that contact missing, and then we will forward it to him, and then you will continue your relationship, your learning relationship with him. But I must tell you that Patrick is a very generous person, and that for him to have given us his time this evening, I'm sure that we all appreciate what he has done. Secondly, just to let you know that Emisi Performance Improvement Solutions, our forte is in strategy and performance management, amongst all other HR advisory services. Particularly, we enable organizations align their people, process, practices, and performance to ensure that they achieve their business results. So, Patrick, over to you. I've announced that you can have a coaching session with those who want more time with you, but they would have to send us a mail, and then we connect you. All right. So go ahead, and I'll continue my announcement later. Please go ahead with what you were saying.
Yes, I think I was talking about affordability and the metrics that show affordability. So we've looked at it. Please use those metrics to display the affordability arguments, so that people are not just throwing arguments all over the place. All right, I think that's it.
Okay. All right. Thank you.
All right, so this junction. Yes, please.
Okay, go ahead. So before I talk, go ahead.
Okay, so at this junction, I think that we don't have any question. All the questions that were raised have been answered. So we would like to say very thank you to Mr. Patrick for the honor done to Emisi regarding this. I want to say thank you. So can this still be taken? Okay, maybe let me just give him a minute to answer this. Michael Astrop is asking, he said, is the law really enforceable and applicable to all establishments? He said he knows some establishment will just ignore the law and carry on. Who enforces compliance?
So the law is applicable to all employers of labor who employ who have more than 25, who have 25 or more employees in full-time employment, whether they are private or public sector. Who can enforce compliance? The employee can enforce compliance. The trade union can enforce compliance, and labor officers can also, under the Ministry of Labor and Employment, can also enforce compliance. There is also a penalty for non-compliance. The penalty for non-compliance, as stated, are 5% of the monthly wage bill as a fine. All outstanding arrears paid to workers, with an additional penalty of not less than the prevailing MPR, which is the monetary policy rates for loans that will be applied for each month of continued violation. All right. Also, it is also instructive to note that for any HR professional that is supporting any form of non-compliance, there is also a fine of 250,000 naira, which the HR professional can be personally liable for. So, Michael Hastrop, I don't know if that answers your question.
I think it's clear enough. I think that answers it. So thank you very much once again for your time and for sharing your knowledge out of your knowledge base with us at no cost. I think everybody on the call would like to see it. So can we just give him maybe an electronic clap just to say thank you? Can we just do something? Let's do it. Can we all do something for Mr. Patrick? Thank you, Ayola. Thank you, Choma. Thank you, Fadula. Thank you, Biabuchi, Igi, Valerie. Thank you, everyone. So everybody's saying thank you to you for spending your time with us on a Saturday when you should have been on Owambe. Well, we really appreciate this. But at this point in time, I would like to hand over to Mrs. Sadegoke for closing remarks. Thank you.
Okay. Thank you so much, Patrick. Thank you so much. You are such a gentleman, and you know your onions. You know this compensation, and you're always willing to teach people. Your kind is very rare, and I look forward to more collaborations with you. Like I was saying, at Imisi, we offer support services for performance management audit, setup, strategy alignment. We also coach HR professionals who are looking to advance their career in terms of moving from HR to manage to other aspects of management, or just generally moving through the HR role amongst other things that we do. I have put in a chart where we're trying to organize something like this for setting KPIs. I've posted it on the chat, so you can just click on it to know what areas you have issues with. And when we're ready for the webinar, obviously, by the time this networking is over, that's when we're going to kind of do another webinar, because it has just been by the grace of God. I have almost 3 phones here, 2 MiFis, and I've just been having to swing through all the 5. It's been a fantastic thing. So please, would really appreciate if you can give us the email to you. We would actually be addressing some of those areas where you have issues with. Please, it's in the chat box. Kindly help us do that. And for staying behind, thank you so much for staying behind, for being here. If you hadn't come, it would probably just have been us and Patrick talking to ourselves. Thank you so much. We look forward to hearing your success stories when you implement the new minimum wage. Thank you, everyone.